Hey everyone, Couch Investor back to another video for today. So, as mentioned in my last video about Alibaba, why the stock was down on Wednesday, what happened there, I said that Amazon also took a hit on Wednesday, but on Thursday, the stock is up 3.7%. Why is that? Well, mostly, let's say, because of the letter to shareholder. Andy Jassy, the CEO, 2022 is the first full year that he is CEO of Amazon. Of course, if you look at the stock, has been a horrible first year. Now, are letter to shareholders so important that you always have to read them? No, I don't think so. But in the case of Amazon, and in this case, the stage that Amazon is at right now, of course, after the era after Jeff Bezos, I did think that this might be an interesting letter to read, especially now in the current macroeconomic environment, the current state of Amazon as well. I think this letter was worth it. So I'll try and summarize the main points out of this letter. Now, if you want, there is this book that I could recommend you. It's called Invent and Wonder, the collected writings of Jeff Bezos. I'll put it up on the screen because you can't really see much with the lighting here. Anyways, I picked up this book on Amazon, funny enough, for only $3. I don't know, it was a huge discount, but basically summarizes or puts together the collective writings of Jeff Bezos. You can learn a lot about how Amazon actually became the company it is today and why the learnings that they wrote, the things that they learned about back then, 20 years ago, even more, are still applicable today. So if you want that, I'll even try and link it down below. Not affiliated, not anything. I just think it's a good pickup if you are interested in reading more about Amazon and Jeff Bezos. So before we jump into this, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So first things first here is, well, quick words by Jassy talking a bit about the situation right now. So I find myself optimistic and energized by what lies ahead for Amazon. Despite 2022 being one of the harder macroeconomic years in recent memory, and with some of our own operating challenges to boot, we still found a way to grow demand on top of the unprecedented growth we experienced in the first half of the pandemic. Then he talks a bit about, by the way, he's been at the company for 25 years. He's the one that actually grew AWS to the state it is today. So props to him on that. And he says here, Amazon would be a different company if we'd slowed investment in AWS during that 2008-2009 period. Change is always around the corner. Sometimes you proactively invite it in, and sometimes it just comes a knocking. But when you see it's coming, you have to embrace it. He continues by saying here, over the last several months, we took a deep look across the company, business by business, invention by invention, and asked ourselves whether we had conviction about each initiative's long-term potential to drive enough revenue, operating income, free cash flow, and return on investment capital. In some cases, it led us shuttering certain businesses. They give us a couple of examples here: bookstores, 4-star stores, Amazon Fabric, Amazon Care, etc., etc. Now, going back to the AWS thing right here, why did they mention this? Well, he mentions this because even in difficult times, if you suddenly remove your foot from the accelerator pedal, sometimes you're doing more harm than if you just continue in difficult times. Because if they did slow the investment in AWS in 2008, 2009, I can comfortably say that there would not be the AWS that it is today. Probably much smaller, in my opinion. And of course, the cost-cutting segment here, not surprising. We've seen the numbers that have been laid off. We've seen the cost cuts in the companies, some business segments being shut down, etc. Of course, Wall Street likes to hear those types of things. Now, and just an FYI, because of course, free cash flow, Amazon, not in great position. But if you look at operating cash flow, which is the underlying business before purchases of property and equipment, etc., which is free cash flow. So operating cash flow is now back to the level it was in Q4 2021 after it had dropped Q1 2022, Q2 2022, then started to increase Q3, Q4. Let's see what happens Q1 2023. My prediction is it continues to improve. But of course, you would like to see free cash flow improve as well. which it has actually done. But let's get back to positive free cash flow. Now, going back to the creme de la creme of the business, which is AWS in this case, and then the number two of the company, which we've talked about a lot on this channel, which is still underrated in my opinion. But let's start with AWS. It says here it has an $85 billion annualized revenue run rate, is still early in its adoption curve, but at a juncture where it's critical to stay focused on what matters most to customers over the long haul. Despite growing 29% year over year in 2022 on a $62 billion revenue base, AWS faces short-term headwinds right now as companies are being more cautious in spending given the challenging current macroeconomic conditions. While some companies might obsess over how they could extract as much money from customers as possible in these tight times, it's neither what customers want nor best for customers in the long term, so we're taking a different tack. We've talked about this before, and I think he mentioned this in the earnings call as well. In difficult times, companies that see that, well, the businesses that they pay a lot of money for are considerable, are helping them going through the difficult times. Over the long terms, when times will become much better, they will remember this. Unlike other companies that still try to squeeze out every single penny out of their customers. Now it continues by saying here AWS is still in the early stages of its evolution and has a chance for unusual growth in the next decade. And then we talk about the next segment here. Similarly, high potential Amazon's advertising business is uniquely effective for brands, which is part of why it continues to grow at a brisk clip. Now, if you want to see some projections, we're going to talk about that as well. So first up, just showing you how good of a business advertising is. So advertising revenue has continued to grow rapidly, 23% year over year in Q4 and 25% year over year in overall 2022 on a $31 billion revenue base. Even as most large advertising focused businesses' growth have slowed over the last several quarters, which we've seen across the board. Now, what are the projections for 2026, you ask? Well, I'm asking you, I'll show you. So according to Statista, in 2026, Amazon's advertising revenue will generate $64.29 billion. So that's more than double what it does today. And of course, if we talk about margins, advertising is a high margin business. Subscription, high margin business. AWS, also high margin business. So again, coming back to that point, that Amazon's high margin businesses or business segments, shall I say, are growing at a faster pace than the low margin businesses, which is extremely important. By the way, for those of you that don't know, Amazon is my second largest position in my portfolio by far. And then before we go and talk about the, well, buzzword of this year, of course, they talked about their next expansions, let's say, or their next growth drivers. So international store expansion is one, grocery is one, Amazon overall business, buy with Prime, healthcare. We know healthcare is going to be pretty big for Amazon. And then Kuiper, we've talked about Kuiper, video will be in the top right corner, the low orbit satellite system, bit of a competitor to SpaceX Starlink. Then, of course, they had to talk about this, and it makes sense, right? So one final investment area that I'll mention that's core to setting Amazon up to invent in every area of our business for many decades to come, and where we're investing heavily is large language models and generative AI. Surprise, surprise. Again, it makes total sense for a business like Amazon. Also, they have AWS, they have advertising, they have Amazon shopping. So why not, right? This is literally a no-brainer. Again, we've talked about this with Shopify. You're looking for something. What are you looking for? What's your budget? What's your size? That's good. Amazon.com has that chatbot, gives you exactly what you want. Advertising-wise, we've talked about the advertising possibilities for chatbots, for LLM models. Link will be in the top right corner as well. You can advertise in those chatbots as well. So it makes total sense for Amazon to invest heavily in LLMs, in generative AI, especially since they have AWS. It can help it a lot. Again, it's taking profits from one bucket, taking that, putting it in another bucket, that bucket grows, then you take profit from that bucket in another one, and so on and so forth. And that's how Amazon became the huge company it is today. It did not become one of the biggest companies in the world by having one bucket. Oh, we have profits in one bucket. Okay, let's try and keep those profits in this bucket, and that's about it. No, continued investments always have a long-term view. And that's exactly what I'm getting from this shareholder letter. But also being a bit more responsible when it comes to profitability. And I think that's also one of the main reasons why the stock is up close to 4% right now. And of course, I have to add something besides what I mentioned with regards to LLM generative AI. Of course, they're going to let other companies use AWS and its services and the LLM models, train their own, and go on from there. I mean, it's a no-brainer at this point, right? So overall, that's about it for me for this letter. Of course, do share your thoughts down in the comments below. Are you more bullish, bearish on Amazon? You've been picking some stocks up under $100. Let me know down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.